Stocks are in a slump? Well, that's putting it lightly. Stocks have been getting hammered of late. And for those of you that have gone through my investing course, you hear me say it often about the importance of having a firm foundation for your portfolio. For the past few years, new investors have flooded the market, and all I have heard about how easy it is to make money in the stock market, how growth investing is the only option that you should take. Well, all of that has come to a halt, and many of those gains have been wiped away rather quickly. Take a look here at some of the losses just in the past month alone for a number of popular stocks. Microsoft down 8%, Alphabet down 11%, Netflix down 15%, Meta down 16%, wiping away all the gains that they attained on that 20 consecutive winning streak that they had. Amazon down 16%, Nvidia down 20%, Coinbase down 35%, and Tesla nearly down 40%. Again, this is just in the past 30 days. Some of those towards the end of the list hasn't been fun owning for investors. But which of those on the list am I most excited about a pullback? It would have to be Amazon and Meta. But what do we do now based on how the market is reacting? After all, we're on the cusp of falling into a correction. And for those of you unaware, the definition of a stock market correction is a pullback of 10% from our recent highs. But this goes to show you on the importance of being well diversified, because if you look at SCHD, an ETF that I talk about on a regular basis here on this channel, in the past month, SCHD is up 3%. On the year, up nearly 5%. Diversification is key and quality is key. And as such, in today's video, we're going to talk about how should we invest, how should we approach this market, and we're going to take a look at a portfolio update, some moves that I've been making for my portfolio. But before we dive into it, do me a huge favor. Show your appreciation for the videos that we put out on a regular basis by simply clicking that like button down below. Subscribe to the channel, and let's get into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is the Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to check out their 10 best stocks to buy right now. All right, so how should we approach positioning our portfolio based on this market turbulence that we've hit? Well, the first thing that you're going to want to do is you're going to want to look at the layout of your portfolio. Does it match the strategy that you have focused on? If you're too focused on one particular sector, or if you're too heavily exposed to maybe growth stocks more than you plan to, you might need to make a few changes. You must solidify, especially the foundation of your portfolio. The top 3 positions within my portfolio include the S&P 500, then a dividend appreciation fund, which has the ticker VDADX, and then SCHD. All 3 of these are either index funds and ETFs, meaning they are a basket of stocks. They are invested in hundreds of different positions, which not only diversifies my portfolio, but it brings stability, especially during these volatile moments. The second thing you're going to want to do is focus on those high quality positions that you've been wanting to build, especially if you are a long-term minded investor. When it comes to investing in stocks, I never invest entirely into a full position. For example, if we are looking to build a full position, which that equates to 10% of my portfolio, I never want to see a single position, a single individual stock have a weighting of more than 10% when looking at my entire portfolio. But let's look at an example. Let's say that we're interested in stock A and we want to build a full position in stock A. So we're going to start out by investing just $300 out of the get-go. Maybe we'll wait a few weeks and even a few months to see how the stock reacts. And I'm here to tell you that you rarely ever buy a stock at the exact bottom. It's pretty much set in stone that a stock I buy continues to go down before it goes up, just the way the cookie crumbles. But let's say the stock climbs 5 to 10%, and that's okay. You can now buy, say, another $200 because we still like the upside and the valuation makes sense. But then something happens, like we're experiencing the past few months, and the bottom drops out. All of a sudden, the stock falls 15 to 20%. We are bummed in the moment, but this has now given us an opportunity to continue to build a position in a stock that we like. So we add, say, another $300. The stock keeps dropping, and we add our final $300. So we have effectively dollar cost averaged into a position that we like. And in a second, I'm going to show you a few stocks and ETFs that I've been doing this in here in 2025. But the third thing that we want to focus on is to not let emotions creep into your investing decisions. Emotional investing is a losing strategy every single time. Let's roll the tape back to 2020 when we saw some huge losses in a short period of time. Take a look here at these 1 month loss figures from mid-February 2020 to mid-March of 2020. I just chose 3 popular stocks. Amazon dropped 15%, Nvidia dropped 35% in a month's time, and Tesla dropped 60% just over the period of 1 month. Not too far off from where we're seeing things today, although the reasons are slightly different. However, from that period forward, look at the returns through the end of the year. Tesla soared an incredible 876%. Nvidia flew up 158%, and Amazon was up nearly 80%. I don't show this to you to show that, hey, these are what the returns are going to be the rest of the year, because I don't think that for 1 second. But the thing to put into your mind is the fact that over the long term, sometimes you just need to take a step back and see that the S&P 500 tends to always bounce back. And if you take a 20 consecutive year period, any combination of 20 consecutive years, you will never find any combination in which the S&P 500 comes out negative. Long-term minded investors win. Investors focusing on quality tend to do great in terms of building wealth over the long term. Focus on high quality and nibble into those positions, especially when we see big drawdowns like we're going through right now. Do not sell because you are scared. Do not sell during a period of panic. Do not sell to follow the crowd, okay? The thing that you need to focus on is sometimes taking a step back and saying, hey, I'm focused on high quality investments. Now, if you're focused on speculative investments, that's a totally different story from that period. But do not try to time the market, because if you just miss a few of the largest days, the largest green days in the stock market, that could add up to sometimes 80 to 90% of the gains for the entire year. Emotional investing is a losing strategy. So what are some of the portfolio changes that I've made recently? And if you're interested in seeing my entire portfolio, then consider becoming an Edge Plus subscriber, where you not only get trade alerts anytime I buy or sell stocks, ETFs, or index funds, but you get deep dives on individual stocks. You also get our weekly Edge report, and you will be able to join our members-only monthly meeting. Check out the link down in the description below. So the first move I made was adding to my position in SCHD, which shouldn't come as much of a surprise, on January 10th. And this is a screenshot straight from my Discord. As you can see, the purchase I made alerting my subscribers. Those shares are now up over 5%. And that was the low point for SCHD on the year. What's another move I made? Well, I closed out of my entire position in IWM. I was looking at the tariff fights that are going on, potential slowing in the economy, and higher for longer interest rates. And I knew this spelled short-term trouble for small caps. So instead of just holding on, I cut that position, and shares of IWM are now down over 12% since I sold out of the position. These are all things that you would see inside of our Discord community by becoming an Edge Plus subscriber. And we also have another subscription that focuses solely on options. But I'm not going to sit up here and tell you that we get every single thing right. Whatever we buy goes green and whatever we sell goes red, because that just wouldn't be truthful. But I'm always going to be helping investors, retail investors, put them in the best possible position that I can, and showing you exactly how I'm managing my portfolio even during these shaky periods. Like I talked about earlier, dips are an opportunity for me to add to positions that I want to build, and Amazon is just one of those. On March 4th, I added to my position, adding 10 shares slightly under 200 at $198. Today's shares are at 194, and if we get those down below 185, I will again nibble at this position. We don't have some magic 8 ball that tells us what the exact bottom is going to be in any particular stock or in the stock market. But what we can help do is focus on high quality investments, looking at great valuations. Invest for the long term and invest in quality. Build a stable foundation for your portfolio, and you're going to do great over the long term. And I know today's video was a little different than what we regularly put out, so let me know down in the comments what you thought of this video. It was intended to give you some insight into some positions and how I'm managing my portfolio in real time during these tougher times. We didn't focus on any particular stocks, 3 ETFs, or anything like that like we regularly do. So let us know down in the comments if you want more of these economic updates, portfolio updates, and things like that moving forward. And if you haven't done so, make sure you click that like button down below, as I truly appreciate it. It really helps out the growth of this channel. And with that being said, we'll see you in the next one. Take care.